You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I sound a wee bit different, because I'm still coming at you from the eye of the storm here in the southern studio here for at least for a few more shows today. We're off tomorrow for volatility views due to the long holiday weekend, so get your fix in today. Hopefully, we couldn't get you, Mixler's like was having some problems earlier, couldn't get you a live stream of the advisors option, but we did just put that in the can. That should be coming at you on the network pretty soon. Also, of course, got your option block. Mixler seems to be working now for that. And a little bit later today, going to have a little bit of TWIFO, so you still get a double dose of all your favorite shows here on Thursday while you get a nice quiet entry into the holiday weekend. And joining me to help me break down the madness, the maelstrom, the melee that is today's market. Let's go around the horn. Let's start off, since we're talking about craziness, let's go to a tranquil spot to kick things off. Let's go to a quiet, peaceful place known as St. Charles, Illinois, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here in a nice, calm, and tranquil place known as the U.S. stock market these days. It's really nice and calm and tranquil, and I don't see how it can ever change.
It can't possibly change. It's just even keel, straight up, and everyone's happy, right?
Everything is awesome.
Everything is awesome indeed. Let's hope things are awesome down there in Jacksonville, where he too is in the eye of the storm as well. Of course, we are joined in the Fidelity hot seat once again by the last emperor himself, Mr. Konstantin VRANDOPULO, holding down the hot seat from the Fidelity Active Trader Strategy Desk. Mr. Last Emperor, how go things? Are you guys battening down the hatches over there in Fidelity Land?
Yeah, certainly. We're preparing. I think the storm is pretty much an annual occurrence. We get at least one a year. So I think that everyone, is mentally prepared. But I do want to make sure that, I announce people take it seriously. And it's always a very dangerous situation to be in. So take the precautions that are necessary. Get prepared for it. In terms of what's going on in the marketplace, I think that everyone is being engaged. The bears and the bulls, day in and day out, is just a roller coaster that we've been on since the beginning of August, and plenty, probably more to come. I'm sure into the end of the year.
I'm sure a lot more to come here even as the show unfolds. Who knows? We'll find out. And also joining us, last but not least, holding down the land of the pit hot seat. He is the most muting of all rock lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, a.k.a. the master of the mute button. How's it going, sir, today, Mr. Rock Lobster?
I think I have my mute mastered, or did I come in too early?
No, you were fine. I just like to tease you because it's fun.
Because I haven't overmuted. I undermuted this time.
You overmute, you undermute. Yeah, we need the middle mute for the Rock Lobster. So maybe we need a new nickname for him, the master of the mute button. Either way, though, I think we got some good stuff.
Overmute, you undermute, everywhere mute Rock Lobster. He likes to mute. Never mind.
Wow, it must be an update in the market. Uncle Mike is singing. He
is.
Listeners, that means it can only mean one thing. It is time to kick off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. It is indeed the portion of the show where we break down what the heck is trading, what is lighting things up on our tape here today. And if you just looked at the markets today, you'd think all was right with the world. Everything up, trade war, a distant memory, everyone happy. Dogs and cats living together, but in harmony now, not in mass hysteria. As we're coming into showtime here, it's a firm day in the green here. Pretty much every major indice up well over 1%. Dow and S&P kind of neck and neck, up about 1.3%. And the leader to the upside here, percentage-wise, is the NASDAQ, up over 1.5%. Oil also taking a bit of a lift. We'll break into all that a little bit. Gold coming off metals week, strong metals week. We'll get into all that in a little bit on TWIFO as well. Maybe Uncle Mike will a little bit as well. We shall see. And, of course, all this green on the screen means a bit of red out there in ye old volatility marketplace. VIX cash coming into showtime was at about 18.25. That puts it down about 2.5 handles. Now it's down even more, down to about 17.75, down about another half a handles. That puts it down pretty much about 3 handles from where it was this time last show. So vol coming in, holiday weekend, all right with the world. I guess we've decided the vol premium is no longer needed. VVIX, a.k.a. the volatility of volatility, at a firm 101.5. That puts it down about 9 handles from where it was this time last show. And our old friend VXX down to about 27. That puts it down about 1.5 points from last show. But let's start. I just mentioned him. Let's start in Uncle Mike land, because a lot is going on in your neck of the woods, Uncle Mike. We got equities rallying, so you got a smiley face. You got big moves in the metals, so you got double smiley faces. What's lighting up your tape today, sir, in this land of Uncle Mike happiness?
The land of Uncle Mike happiness. Well, I mean, a couple of things. Definitely silver's a big story this week with the increase in it. It's a pretty nice little run. It is actually up even higher today pre-market, so it's off of its highs from where it was pre-market. But what's interesting about it now is that silver seems to is starting to catch up to gold in terms of the rally. So in other words, we're starting to see silver in a little bit more of an inverse relationship to the S&P at this stage, and that market's higher. Silver actually came a little bit lower today. And that, yes, we've had the rally over the course of the last couple of weeks, but silver is pulling back a little bit today. Nothing major by any means, but it's just had such a rally lately that a little pullback is somewhat natural. Now, what silver has been reacting to hasn't so much been a true inverse relationship. However, it's been, if you look at over the course of this last month, the S&P is relatively sideways. A lot of the downturn actually started in late July from where we are. And by downturn, meaning going from a little over 3,000 to a little over, or to the mid 2,900s in the S&P, or a little bit lower than that, I should say. So with that being said, what silver has rallied on has been the S&P's channeling effect, but it's been a big channeling effect, though, of a pretty significant amount from the 2820 level to the 2920 level, approximately, maybe give or take a little bit more. But silver has decided to increase during that time of uncertainty. Yeah, of course, we had the inverse yield curve. We had the also the tweet-driven market that we have right now, and there's a lot of geopolitical risk that's going on. And so I think with that, people are start to view silver as a little bit more of a safe haven over something along those lines again. And now, when China's making comments right now, asking Mr. Trump to come to the negotiating table with reasonable expectations, I believe is what the exact quote was, or a calm demeanor, it seems like maybe it shows that China might be willing to give a little bit, but who knows? We will see.
We shall see indeed as we keep on rolling right on into Fidelity Land. Mr. Last Emperor, sir, you guys were chatting a lot on your last appearance about our old friend TVIX. I'm curious, is that still lighting up the Fidelity tape? And what else are the Fidelity masses slinging on this pretty much all green on the screen day, sir?
Yeah, guys, I mean, we talked about TVIX at length. TVIX is the number one spot of in orders by Fidelity customers on the equity side of things today. I looked at it a little bit earlier, was down almost 10%, down just a little shy of 9 right now. So taking a beating makes sense because, like you guys mentioned earlier, VIX is coming in, is sub 18 handle. The VIX SEP and OCT futures are down both north of 3%. So, TVIX being mainly in that September future and it being down, 4.6% right now, it's dragging things along. And as everyone remembers probably from last show, it is a 2 times leveraged product. So today, taking it on the chin, has been, very volatile, obviously, over the past couple of days. I think last Thursday when I was on, folks were buying it in masses, and it looks like they might have been right for a few days, so it kind of paid off. Today, they're buying it again, 71% buys to 29% sells, but obviously the underlying is much lower today. So we'll see. I guess this product could be, a friend to some and a pretty decent nemesis to others. So just buyer beware, like mentioned on the last program when we explained the intricacies of the product. The second one that is coming in and is usually on the board is Apple. Apple up 1.5%, kind of just in line with the NASDAQ 100 there, being the leader. I did see some decent-sized prints in the options market today. It looks like we might be doing a little bit more than average volume into the end of the day. We've got a couple hours to go, so we'll have to wait and see. But Fidelity clients are actually selling it. 61% sells to 39% buys right now. Obviously, these stocks, these tech stocks have been up and down. Apple's been in the news a lot, has a lot of exposure to China. So, it tends to be moving on those geopolitical news and tweets. Just like everything else that's involved in that space. Amazon is number 3. Amazon up 1.25% right now. And Fidelity clients are on the sell side of this name today. 65% sells to 35% buys. Amazon's chart is quite interesting. Obviously, it kind of disappointed the street on earnings. Maybe, with that talk of additional spending, the stock came off of a 2,000 level all the way down to 1,740 or so, and has been trading in a range of around $60. 1740 to about 1820, currently trading at 1786. So kind of a range bound here. I would say, from the perspective of top technology names that, generally make up this top, echelon of the NASDAQ 100. This name has been the laggard. And it looks like Fidelity clients are taking the opportunity on the stock being up today to actually sell into the strength. The fourth one that I actually mentioned last Thursday when I was on the show, it was on my watch, was Best Buy. Best Buy has a lot of exposure to companies that manufacture and produce their products over in China. So I was actually keeping my ear out on this conference call. Just want to make sure, whether or not China was going to be mentioned. They missed revenue, beat earnings, but the stock is down over 9% at this point on guidance, and there was a substantial amount of commentary about these potential pressures that come from tariffs and what it's going to mean for their future earnings into 2019 and 2020. So very interesting. Stock is definitely on the move, and I would say that if you're a follower of Best Buy and you're looking at a 1-year chart, that the stock is actually down year over year, but it has been outperforming the S&P 500 year to date, at least up until this earnings announcement, right? So at some point it was up over 50% going into August, and going into this earnings announcement, it was up 28%, while the S&P was only up around 16. So it was outperforming decently, and now with today's move to the downside, it's pretty much in line with what the S&P has done. So earnings announcements, at least the last two, have not been very kind to Best Buy, and that's something that continues to be on my watch list of things. Some interesting action there from these big multi-line retailers. By the way, guys, I also want to make a little bit of a correction. My friend Trey mentioned to me that I put Walmart into the consumer discretionary category last Thursday when I was discussing multi-line retailers and the moves that we've been seeing in Target. And at least I know that he is listening, because Walmart is obviously not a discretionary name. It is a big staple. So quick correction there. Just want to underline. And I'm glad to hear that my colleagues are actually listening in.
Trey's always lurking out there. You could see him lurking out. He's always making sure, keeping tabs on you guys, making sure you're not throwing Walmart around willy-nilly over there. All right. Well done, Mr. Last Emperor. And last but not least, we've got the rockingest of lobsters. Let's see if he can master the mute button one more time. Mr. Rock Lobster, sir, we're up, we're down, vol's up, vol's down, vol's coming back in now as we're heading into the holiday weekend. Is that set in stone, or will it be topsy-turvy again tomorrow? I guess we'll find out. But for the meantime, it's been a topsy-turvy week, sir. What's been lighting it up in the land of the pit, and what are your crazies in the pit chat? What are they up to these days?
I just want to make sure if I'm 2 for 2 on hitting my mute button right.
I can hear you. Yes. Well done.
All right. Well, you got every journey starts with the first step, or first 2 steps in this case.
Yes, indeed.
I think, but I'm not sure. This is generally how this progress is going, where our current president prefers to negotiate things through Twitter. And we're right now, I almost would say the Chinese are slightly conciliatory, considering, I think the big surprise of last week, the president throwing down more tariffs and whatnot, I think it caught the market by surprise, maybe caught the Chinese by surprise. I don't know how they could be surprised at this point. But at least the rhetoric is, well, we're looking for a calm way to discuss this, right? So generally the market likes that. And as long as you don't hear too many awful things, historically it takes about, vol, VIX drops about, you have this first move out of zone 2, and we're now into zone 1, I believe, today. So no, we're into zone 2 for the first time in a week. So that's significant. So the market has taken the top level off of the vol. And I think we're basically where we were last week, where we have like an elevated VIX because the market's moving every day. And we have a curve that is flat, but back to above the cash price. So we are back into the same place we were last week, where the market says, okay, we'll wait and see what you give us. But if you want to buy vol futures, you're going to have to pay a little more for them. And I think that reflects a more uncertainty, but the fact that the futures are getting over the cash, that's a more normal, a more normal structure. So if I actually see this really flatten out a lot, a little bit more curve comes back into it, where the SEP future starts to dive down a little bit, I think this could be interesting. So I think the problem is, the only thing now is the pace of vol going down. So if you put yourself in the position, if you're trading in the SPX, right? So the only way VIX goes down is if somebody sells options in the SPX. So who is going to sell those options, and what are they going to sell? Are they going to sell upside calls so they can all look stupid if we go back to 3,000 again? Probably not. So what you really need to see is if paper is starting to sell downside, right? You want to start seeing the downside curve compress. I usually tweet out a curve about midday every day from our Edge Hunter product. And so if vol's truly going to start going down, you always need a willing seller. And you need the funds to come in here and start saying, okay, I'll start selling some 2,700 puts. I'll start selling some 2,800 puts. I'll start selling some 2,750 puts. This is how the SPX trades. It lives on the put side of the curve. And the liquidity providers normally balance kind of their gamma by buying whatever upside the funds sell. If nobody is coming in to sell upside, don't expect VIX to come down too much. Even though we keep rallying in SPX. So, that is, I know that's kind of a technical vagary of how the product trades, but that's what it is. So if we keep having these 1.3% gaps up, it's very hard for VIX to drop too much, even though we're moving, we're moving up the vol curve. So at least as of right now, the market, we're back to where we were last week before the last tweet storm. And it's the same thing. And it's the same thing I set up for last week. And I probably did not sell. I had a pretty substantial amount of long vol, and I could have got good prices for it, but I have to admit I was pretty greedy, or a little bit greedy. I only sold a tiny bit. And now I'm actually looking for the other side of my position to kick in to make any money. But beyond that, we're now at the spot where, okay, if there's no more tweets, right, now vol will start coming down. But what we can't have is, you don't want to see that massive SPX rally, because it's hard for VIX to come down. If you're a vol watcher, that's kind of what you need. What you really want to see is, you want to see the downside of the curve start to compress. That actually will start to bring VIX down, because people are selling puts. I don't think there are a ton of call sellers right now, because everybody's tired of getting the calls they sell served back up into their face in short order, which is what these rallies have been doing. So that, from a vol watching point of view, that is what I is watching.
Nothing better than getting those vol calls served back in your face, sir. This not a pleasant experience, nonetheless. Let's see what's lighting it up in VIX and other products right now. Coming into the start of the show here, we saw VIX doing decent paper, right around half of its ADV, about 350,000 contracts on the tape. The ADV a little bit north of 700,000. SPY doing almost exactly half of its ADV. Actually, looks like exactly half, about 1.7 million on the tape. Coming into showtime, the ADV about 3.4 million. SPX, again, 700,000 on the tape, ADV about 1.4 million. So everyone pretty much doing about half their allotment for the day coming into noon central, which is interesting. The Q's at about 340, the ADV out there a little bit north of that, about 770 or so out there. And then we've got the Russell, aka IWM, coming in about 200,000, ADV about 458. Russell's been performing interestingly of late. I think we'll get into that more in a little bit on TWIFO, listeners, when I'm joined by Sean from Russell to break it all down in a little bit. That's coming up about half an hour after the old option block, or pretty much the next show on wherever you're listening to this right now on your podcast platform of choice. Going on to the most actives out here. Let's start at top 10, number 10 here. GE, 92,000 on the tape. If you want a sweet GE trade, tune in to OPR this week. Brian had an interesting one, taking that Boeing strategy. He's been working on that long straddle, kind of with a kicker strategy, and applying it to GE. So check that out. Number 9, Netflix, 102,000 on the tape today. Number 8, good old Baba, $1.15 on the tape. Number 7, Amazon. Have you heard of it? Never heard of this name? Small little retailer out of Sheboygan, I believe. 117,000 contracts on the tape. Number 6, good old Bank of America, $1.19. Number 5, Facebook, $1.33. Number 4, Microsoft, 141,000 contracts on the tape. Numero Trace, Tesla, $1.48 on the tape. Number 2, it's the same old song and dance. Number 2, AMD, $1.78. Number 1, yep, you guessed it, Apple. The two A's vying for the top spots yet again. But Apple getting a little bit of distance with AMD. 321,000 contracts on the tape today, coming into midway through the show here. Looks like the most biased flow on the docket today appears to be, it's pretty close actually. We've got two names doing 67% of their paper on the call sign, but one slightly more, 68%. That goes to AMD. 68% of that paper coming on the calls. If we go down a little bit past the top 10, all the way to number 13, Ford, 90% of their 82,000 contracts were calls today. So interesting action out there in Ford. Speaking of interesting action, if you like that kind of thing, we got you covered there. The earnings reports are up. And not just the earnings reports where we break down. In fact, some of these just hitting the Options Insider as we speak, listeners. So hot breaking stuff from Matt and our friends over there at ORAS. I was just talking to Matt earlier today for the advisors option. Look for that on the network soon. But they're breaking down all of the most recent developments out here. And some names you guys like, including some names looking forward to, like Lulu. It's not all done yet, listeners. Lulu coming out next week. We got some other big names popping off there as well. Stay tuned for them. Marvell, our old friend Marvell out there. The earnings season report, pretty interesting. Matt was breaking it down for me, telling me how this is pretty much the wildest season they've seen yet since they've been doing this and analyzing the data. So check out that earnings season report. It breaks it down by week, how week 1 compares to previous weeks, week 2, all the way out to week 6 here, and 83% underperforming their straddles. Not a good week to be long premium. Last week, the opposite, 121% outperforming their straddles. So good week to be long premium again. So kind of a weird one. Net on the cycle, 115%. Premium buyers winning the day. That's pretty close, though. I mean, those losers can leave a mark. Interesting stuff. Sink your teeth into that one. And, of course, Mr. Trey mentioned, or excuse me, how dare I? Mr. Last Emperor mentioned Best Buy earlier. They are in the report here. They were pricing in, they were closed at 66 and a quarter. Going into the report, they were pricing in about $5. Let's see, $4.93. And let's see, the past reports, they were pricing it there about $6. So actually, it was a little bit lighter than what they priced in past results. And as Mr. Last Emperor alluded to, not exactly feeling the love today with the stock. There we go. That's easier. The stock off about 6 1/3, about 9%. Come into showtime. So outperforming their straddle to the downside. Meanwhile, it's time for us to outperform the rest of the show. It is time for the Odd Block.
The Odd Block.
All right, everybody. Welcome to the Odd Block. You know the drill. Let's find some weird, some wild, some wonderful paper to break down. Actually going to kick things off looking back a little bit. We've been profiling a lot of interesting, weird trades of late. It's time to catch up on a couple of those, at least one in particular that we talked about not too long ago. This was back on the 1st of August when we were talking about our old friend, Mr. GoPro. And in particular, back then on the 1st of August, we saw someone was loving themselves some upside, and some pretty extreme upside. At the time, we saw paper gobbling up, it looked like 10,000 of the AUG 6s for 13 cents. These were 11 cents at 13, so they were gobbling up that offer. This was opening. It was pre-earnings. Earnings were that day, the 1st, after the bell, so obviously a little bit of earnings flavor was in there as well, swinging for the fences a bit on earnings. At this time, the stock on that day closed at about $5, $5.03. So someone was betting on a nice pop to the upside into the tune of $1 and willing to pay that going into earnings. Spoiler alert, fast forward a month or so or a few weeks until expiration, and this trade didn't exactly work out. In fact, GoPro on expiration this month closed at 401. So, yeah, these 6 calls never really had a chance. And looking at the numbers here, the OI, there were still 24,000 of these bad boys open on expiration. So, Mr. Meatball, I apologize, Mr. Rock Lobster, we've said this before, it's a dangerous row to hoe when you take flyers like this going into earnings. This was obviously some earnings lottery tickets. This guy had 13 cents. He didn't want to see any more 10,000 times. And he decided to let the dice fly high. Apparently, Mr. Rock Lobster, it did not work out in his favor.
It did not. I remember seeing these. Didn't we feel like these are kind of spec at the cheap, but it was quite a it was a long road to hoe.
Yeah,
for the earnings.
These were very
stock.
specky. They were very much scratch and sniff lottery tickets, and looks like, unfortunately, the lottery wins again.
I think as we have line in the sand puts, I think we should name these a bridge too far calls. It's just,
I like it.
It's possible, but it literally is a bridge too far for anybody to reach.
And this guy effectively had 12 hours, right, for these things to work out, because it was a total earnings flyer. Yeah. Once I haven't looked at the numbers, but I got to imagine once that announcement was out on the 2nd, these things were nowhere close to 13 cents again, and he had an even farther bridge to cross at that point.
Yes.
Oh, good.
No, I agree with you. It's just you want to. I mean, if you buy calls, in my head, you want to have a statistical chance for them at least to work, unless you have knowledge that the rest of us do not have. And in that case, you can do whatever you want. But of course, I do not advocate insider trading. But that's the only way I would think you could trade a call like that. But again, bridge too far calls wasn't our favorite type of trade. But he only, what did he lose? That's 13 cents, 10,000 times. It's only $130,000. So
that's $1.30 amongst friends. I like that. You should have a statistical probability of your trade paying off. That's probably a good starting point. Is there any probability?
Like a shot.
Is there any remote probability of your trade making money? Okay, then you should consider it at the very least. Let's see if our next friend has a remote probability as well. We've got your old favorite, Mr. Rock Lobster. We've got some line in the sand puts, looks like. This time in Illinois, Toolworks Inc., ticker symbol ITW. Trading today almost 148, 147.80, up about $2.50, nearly 2% on this name. This is the one that's kind of had a tumultuous year. A year ago, they were trading pretty close to where they're at now, about right around 139, so off a bit. And they rallied up pretty quickly up to right about where they are at now, right around 148. And they sold off again pretty aggressively down to 119 in October, and then kind of rallied up to 140 in December, then before selling off again late December, down to where did they go to? Here we go. They got down to 118, 119 again, so this thing's been very volatile. And then it's been on a nice rally, got up to, ever since the nadir there on Christmas Eve, got up to nearly 160 in April again, so a nice turnaround before selling off again down to about 140 back in early June again. So this thing swings. For a Toolworks name, this thing's got some vol, and it's been up again nearly 160 again as of late July before selling off down to where it is right now, right down to 148. So Mr. Rock Lobster, year on year, looks like not much has happened, but actually it's been extremely volatile, this name. The 52-week low, about 117.75, 52-week high, nearly 161 on this name. Let's see what our friend was up to today. It was the AAPL 135 puts going up for $1.85 4,000 times. So these were on the bid. They were $1.85 at 205. Going up on our friends over there, the MIAX opening over there. There are earnings. The earnings are actually the 24th of October. So I do believe that is outside of the lifespan of this contract. Let me just check really quick. Yes, actually. Oh, no. Actually, the 18th is expiration. So, yes, it is. It is outside the lifespan of this contract. So, close but no cigar when it comes to earnings. So, a weird one, Mr. Rock Lobster, drawing a line in the sand, 135, not a level we've seen in recent history for this name. But, again, it's so freaking volatile, it could be there tomorrow. We don't know. Getting nearly $2, 4,000 times to draw that line in the sand. Also doing it, interestingly enough, before earnings, which makes it kind of interesting. Maybe you like someone better as a result because he's not riding it through earnings, sir?
I mean, I like that. I'm just looking at, again, I think this is one where the name has been moving a lot. They're getting better than 1%. It's to October, so it's not, maybe it's 1.5%, a little less, maybe 1.25%. And you know what? They want to just wait out the market volatility. Market up, market down, blah, 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 blah. They sell these puts, and at worst, when it all's said and done, they're looking past what's going on, and they're happy with their 1.5% on the put sale. So I don't think this is an unreasonable one. I think Illinois 2 works. It might be like one of those stocks where all the products that maybe they send to China or whatever it could be tariff sensitive type company. So maybe that's part of the volatility. Again, the broader market's been pretty volatile too, but I don't think it's an unreasonable trade. And to be honest, the vol that's in there right now doesn't exist normally. So I think somebody's just taking a flyer on a low price, and maybe TOSAW would agree on this one. It's just, you want to put money to work where you really don't think you have that go-go upside, but you're willing to take a stock at a lower price. And as long as you get somewhat of a decent premium and you're getting, what I would call probably 6-month lows on it, or darn near, you're getting 6-month lows on it. I think that's a place to park some return. So I actually like this as a trade. I don't think it's too bad.
Uh-oh, you have invoked him. Now we must check his opinion. Maybe he disagrees with you completely. Mr. Uncle Mike, sir.
Exciting.
It's exciting. Do you like these puts, sir? Are you a fan, as the Rock Lobster has said for you?
Well, how can I never agree with a lot? How can I not agree with a lot? Rock Lobster. He always has my best interests in mind.
Oh,
wow. Okay. Look,
that was a rousing positive.
A distinct lack of umbrage on his part, which is interesting.
TOSAW is a practitioner of selling the out of the money put to take delivery, and I mean, ultimately you're getting, it's $13 lower than it is now, and it's at a year low. So, I mean, the key to buying
not the
stocks
worst thing
is
in the
when they're
world.
cheap. When they're cheap. As the last time I checked, the most successful investor in the world, does he buy stocks at the bottom or does he buy stocks at the top? Let me see. Oh, I think it's at the bottom.
So far, if we're counting the nuggets of investing wisdom dispensed by the Rock Lobster today, it's first off, make sure your trades have a remote probability of making money, and then secondly, buy stocks when they are cheap. So if you can just master those two trading tips, listeners, you are on the path.
You'll be in pretty good shape
to riches and
they don't sound terrible, right?
You should start a newsletter, sir, with all this wisdom you have to share.
Oh,
people would pay.
No kidding.
People would pay for this wisdom.
Yep.
All right, let's see if our last friend here is as receiving as much love as our previous two here. If $1.35 was a little bit too rich for your blood, listeners, don't worry. We got you covered. Our last name here is RLGY, maybe, because I think it's real estate. RLGY Holdings Corp. Ticker symbol RLGY, trading today a whopping $4.62. Let's say taking it on the chin in this name, off $1.50 or nearly 25%. Guessing bad earnings or something along those lines. If you're not familiar with this name, and who is really. They are a real estate, effectively a holding company. They engage in the provision of residential real estate services, which focuses on empowering independent sales agents. I believe they own a few companies, including Coldwell Banker and Century 21, and a few others like that. So clearly, not exactly boom times in the real estate holding companies. This thing taken on the chin. A year ago, they were substantially north of where they are right now, 21.5. They were threatening, they're pretty much at their 52-week high of 21 3/4 or so. And it's pretty much been, unlike our previous name, which was up and down and up and down, this one's been pretty much on a long, slow, steady decline ever since pretty much a year ago. It's just been nonstop downside. It hit its low, 52-week low, probably today, of 452. We're off a dime from that right now, 462. So not exactly been a boom year, and certainly today, not a boom day for RLGY Holdings. Let's see what's going up today. I'm going to go out on a limb and guess people are probably liking some puts, and that does appear to be the case. So RLGY AAPL were the big play today, Mr. Rock Lobster. Interesting because these are now 40-cent in the money puts. I'm guessing there's a dearth of strikes available out here as well, but this stock's moving quite a bit, so they were probably gobbling these up as the stock was moving. These things went up for 80 cents, lifting the offer. Again, when the stock's down 25%, you don't have time to dilly-dally. You got to lift that offer and do it quick. This was a sweep across multiple exchanges, including the Philly, getting all 3,500 done. This was not opening, interestingly enough. There are earnings on the 1st, but this is obviously not an earnings play. Or 1st of November. This is pure get your downside in. Puts are lighting it up today. SEP 5s also pretty active. Looks like Jan 2021 5s are also trading today, which is weird. So Mr. Rock Lobster, names pretty much melting down. Not sure why. I'll have to dig into the individual news. But people scrambling for some puts. This kind of brings to mind the old adage, right? When the hurricane's bearing down, to keep with our storm theme, you don't scramble to buy the house insurance. People are scrambling to buy that insurance today, sir. Maybe it is too late. The horse is already out of the barn, sir.
It feels like that. I mean, you would think like Coldwell Banker, like all this is they're kind of marquee names, right? I'm looking at all of the fundamentals on this one. Can't quite figure it out. Supposedly, they got X dollars of cash per share, $2 a share. The book value of the company's $19. It's trading for $4.64. So, at least according to the numbers, it's really not looking very good. So either this whole business is getting, they're getting Zillowed or something like that. I don't know. But just, it's either a great value play or it's a company that's going to zero faster than nothing. So, very confusing. So I would almost guess that this buyer of the puts, I don't see why you'd bother buying them at this point because you're already down like 75% on your stock if you're owning it from the top or whatever. It might be a decent puts and stock in play for October. And either way, they want to at least draw the line as far as I don't want to lose no more money. I don't want to lose any more money on this stock. So, interesting potential value play is all I would say. I think there might be some leverage in some like longer term options, maybe a year out. But at $4.62, you maybe just buy 1,000 shares on a flyer and see what happens. But interesting nonetheless that this company is basically trading for nothing. Like the equity is worthless in this company right now. So might be worth digging into and seeing. Flag it as a revisit in, let's say, 2.5-3 months after all this mortgage refinancing and stuff happens. Because I assume we're going to have low rates for a while. And then see where this company is, but just very, very inexpensive company at this point.
Yes, I have flagged it, sir. It is now in our to-be-watched category. We shall return to it. Speaking of which, and watching out here is looking for some news of why this thing is just selling off so hard today. I didn't see that, but I did see that insiders have been buying this thing up of late. The CEO bought about $1 million worth of stock back in May, and they've been dramatically overweighting on the buying side over the last 12 months. So I don't know. Maybe that's an averaging down. I don't know what they're up to out there. But the insiders buying as the stock continues to plummet. Maybe I'm not sure if that's going on today. I guess we'll find out. But interesting stuff here. We'll keep an eye on RLGY, up to you how you pronounce that, as we keep on rolling into the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block. This is the portion of the show where you guys take the reins, questions, comments, insights, pearls of wisdom. Let's kick it off with a fun one here. This comes from, what is the name? I just had it up here. There we go, Joe V. He says, this might be the best indicator of all time, and he includes a link that someone else tweeted here of a chart of the S&P 500 with over the past, looks like, 5 or 10 years, and looks like, and he also has marked on this chart every time that CNBC has announced a Markets in Turmoil special. And he marked that on this chart. And almost without fail, every single time they've done that, there's been a huge rally in the markets as a result. So apparently he's calling this Markets in Turmoil a fantastic bottom indicator. And looks like, judging from this chart, which we have not independently verified at all, just looks fun, that could be the case. I don't know, Mr. Last Emperor, you're our resident technician here. Are you buying this Markets in Turmoil as a bottom indicator, sir?
I mean, it's very interesting. I'm looking at this chart. I have, actually noticed that not by going back and spotting these instances, but generally speaking, I would say it's all about sentiment, right? And all parties being on one side of the boat or the other. So in situations like this, when everyone is basically, screaming panic and bail, that might be actually an opportune time or an extreme oversold condition for the short term. If you go back to 2018, the fourth quarter of 2018, I think they probably had 3 or 4 of those market in turmoil specials from what I remember, and they might have been temporary bottoms, but then eventually, right, kind of the technical pattern played out to the downside. We were trading in a 200-point range in the S&P at the time, between the months of late September and early December, and then played out to the downside with a break. Right. Currently, it feels like that pattern of the box is pretty similar. You have pretty wild swings back and forth. They're not as wild as we saw in 2018. It's about a 100-point range this time, but it's back and forth up against resistance and support. So I think, instead of, well, maybe you could watch, a sentiment indicator, kind of an inverse effect of everyone is on one side of the trade. So you might be thinking about doing the other. But I would be mindful of, actual technical breaks of significant levels of support and resistance. So I would say my suggestion would be, trade on confirmation. And when things get this volatile, maybe think about decreasing your position size to make sure that you can risk manage if things don't go the way you expect.
Well said, sir. Let's keep on rolling here. We got Steve J556. He wants to know any news on Yelp. It looks like somebody knows something. I think he's referring to the hot options report we posted back on the 27th, of course, on the optionsinsider.com. We profile what's trading every day, what the hot options are. And numbers 8 on the 27th was Yelp. Looks like the AUG expiring on the 30th. So these are in the weeklies, not the traditional monthlies. 33 calls were lighting up that day. Number 8 on the top 10 of trading contracts that day, with 18,485 against open interest of just 125. So clearly a lot of opening paper. I pulled this up here while we were looking to see what was going on that day. Yelp, by the way, if you're wondering right now, listeners, at about 33.5, up about a dime. So kind of unched on the day. This is the one that over the past few days has kind of been actually rallying. It was trading 32 back on Tuesday, hit a high yesterday of 34.05. So had a nice little pop. And what was trading, I pulled it up as well, courtesy of our friend there, the Flowmaster and his trade alert, to see what was going on the 27th, see what was lighting it up. And looks like Mr. Rock Lobster, looks like it actually might be, as one of our old friends, has a feel of a newsletter about it, which is a lot of small trades coming in, and not tiny, decent size, 300, 200. The biggest print was 449, but these things added up all day for a total of 18,000 and change. Also, they were scattered throughout the day. They weren't all in one big sweep. They were, a few here, a few there, all throughout the day. So it has the ring of maybe someone coming out with a newsletter, Mr. Rock Lobster, and saying someone really got to get on these AUG 33 calls. In which case, I guess, well-timed on them. The stock's up. It's off now, but it was up. I'll have to look and see if they've closed these since then. But I don't know. It's a weird one. This is a lot of paper. You're right, but it's in small chunks. So I don't know. Mr. Rock Lobster, are you feeling newsletter on this one as well? As it's kind of a weird one.
It is. It does feel like a little bit of a newsletter trade. So most for the viewers, if you're looking at volume, and I know different people do open interest and volume and stuff like that. When you see a lot of volume on the same strike, it's generally somebody with a wide audience, maybe a Schaefer or something like that. I hate to mention other services or names out there, but they put out this sort of, hey, these are the things to buy, and the 10s and the 3s and the 2s and the 1s come streaming in to buy the exact same option, which of course jacks the vol up on that option, and then all the other stuff around it is actually a little cheaper. But that's what this appears to me, at least.
I'm looking here. They traded a bunch on the 27th, and then 5,000 traded on the 29th, and 3,700 on the 28th. So maybe someone, for some reason, the OI numbers are kind of funky here, but so it's not showing me the right OI if that was closing or not. But they could have come in and scooped them and then dumped them on the next day. That would be kind of in keeping with the newsletter, right? Make your 20 or 30 cents and get the heck out of Dodge. But that's what our guess is, Mr. Steve J556. It looks and has the feel of a newsletter. In this case, maybe a well-timed one. I mean, if you had to scramble a bit to get out of them, but if you did, you might have done all right on this bad boy. All right, we've got to keep on rolling and go around the horn with a little bit of the old around the block.
Around the block.
All right, everybody. Welcome to Around the Block. This is indeed the portion of the show where we do exactly that. We tell you what's on our radar for the rest of this week into the long, extended, actually even longer because we won't have a show on Monday, holiday weekend. Let's start with the uncleest of Mikes. Sir, in addition to the big move in silver, what is on your radar for the rest of this week?
The 3,000 mark for the S&P, seeing if we can continue with this rally and see if we can push towards the 3,000 mark. But then the other thing is actually volume. All the people are coming back from the Hamptons this weekend. Not that I'm there by any means, but in theory they all are, meaning a lot more volume typically comes into the market in September, typically after the Labor Day weekend. So excited to see where this market goes once we have more big money involved with it.
Big money, no whammies. All right, Mr. That's a dated one. Actually, I think they brought that show back recently, so maybe not as dated as it may initially seem. Mr. Last Emperor, sir, while you're not pressing your luck, what is on your radar for the rest of this week into the weekend?
So I am watching personal income and outlay. That morning comes out 8:30 Eastern. Since the consumer here in the U.S. has been the strength of the GDP growth, that's something that we want to continue to see strengthen. So personal income, hopefully growing or at least in line with the consensus and consumer spending month over month. In line with that, of course, there is an earnings announcement from Ulta stores, and I think that it kind of goes hand in hand with consumer spending. Every time I walk by an Ulta store, at least from the outside, seems like it's an absolute madhouse inside with a line to the register around 20 deep. So we'll see how they do. I know that the stock has been relatively volatile, but a great outperformer over the past year. So we'll see how they do on earnings. That's what I'm watching.
And last but not least, Mr. Rock Lobster, sir, what are you and the crazies in the pit chat watching for the rest of this week until next week, sir?
Really, okay. The final economic data, which would be it's most of it has been good. So we got the rates sort of set; they're lower, and I just want to see, but VIX, if VIX subsides and we just drive kind of to the next level that we were just at, which would not surprise me, because you got lower rates, you have the whole China thing, it goes away for a while, then it flares up again, and the rate seems to be done. The only thing that it looks like the ECB said, hey, we're not going to ease anymore, and I think while short term everybody will be grumpy about that, I think it's better that they don't. Figure out another way to grow your economies besides continuing to press on the bond button. So overall, I think those are all positives. So I think tomorrow we see VIX in the 16 handle with no problem, even if, I'm expecting just kind of a lackluster equity day. So, and that's about it. Then we gear up for, literally have what? We have 3.5, 4 weeks till the next earnings cycle. So again, without the trade stuff, but we do have it. I think stocks are higher and the market's lower. Current trends. So that's what I'm looking for. I'm looking for a rally action next week, unless the tweet, the tweet engine starts happening again.
You can never discount the tweet engine. Unfortunately, listeners, that music means you can't discount the end of the show either. It is nigh. Unfortunately, Mr. Last Emperor has to go pack up for the Hurricanes, as do we here as well. We got to get the heck out of Dodge. But before we do that, let's go back around the horn, see what everyone's working on that may interest you. Let's start with Uncle Mike. Sir, if I'm a little bit nervous about these markets, maybe I got some gains after these last few days of rallies, I want to lock some of it in, and I want someone to help me do just that. Where should I go? What should I do, sir?
Well, what we're doing right now is we have a lot of sophisticated ways with which to protect gains. If you feel that vol's too high, there's ways with which we can use spreads to protect things. And we do a lot of things here in the option world. So if you're interested in a financial advisor that does that, reach out to me at stcharleswealth.com.
Thank you for that, sir. stcharleswealth.com is the place to go. Hit up Uncle Mike. Let him roll your puts for you while you sleep like a baby. And Mr. Rock Lobster, sir, if I want maybe to learn more about what to do with those puts when I got them, and maybe a little bit about this vol stuff, and also some pearls of wisdom, like buy stocks when they are cheap, where should I go? What should I do?
You go to our store, buy any of our courses, which would help a lot. My vol newsletter is pretty popular. My subscribership's growing, so that part's good. Also, Mark is doing a webinar on Wednesday for free, so surf on over to the Option Pit website and do it. And on the front homepage, and you can sign up for is a butterfly seminar on Wednesday of next week.
I like it. Freebies are always good. OptionPit.com is the place to go. While you're there, sign up for the man's newsletter. It makes him happy. And then he's not grumpy on the show. And then everyone's happy after that. So sign up for the vol newsletter at OptionPit.com. And last but not least, Mr. Last Emperor. If some folks like some freebies of their own, maybe they want to get some freebies from the Fidelity Options team in terms of analysis or coaching or strategy. Maybe they just want to kick the tires on the Fidelity Options platform. Where should they go? What should they do, sir?
Yeah, if you're a Fidelity client already, come on in, fidelity.com/coaching. That's where you can find us every single day. We put on a few coaching sessions, probably anywhere from 2 to 4 a day. So plenty of things to look forward to. If you are not currently a Fidelity client, you can go to fidelity.com/options, open an account, apply for options trading. And of course, I always welcome anyone who is a listener of the show to give me a call if you have something to discuss with me personally about your account in your particular situation. I'll be delighted to speak with you, give your regular Fidelity service line a call and request to speak with me. It'll be a pleasure.
There you go. Ask for the last emperor himself. He is waiting. Operators are standing by to take your call. And on behalf of the last emperor and the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. If you are indeed, stay tuned. We'll be back in about half an hour to talk all things futures options on TWIFO. Otherwise, we'll see you back here next week. Not on Monday. It's a holiday, of course, here in the U.S. We'll be back on Thursday for this show, a little bit of the old option block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.